Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Friday, July 15th, 2:45 p.m. New York time. Talking about options, following up from the prior video I released on Tuesday, July 12th about options. And two examples I gave was one on the stock Robinhood. At that time, that stock was $8.47. Let's look at the option chain. So currently the stock is lower, $8.38. It's not closed yet. We have to have 4 p.m. New York time to the stock market closes. But if you were bullish and bought that stock at $8.47, well, if you're still in the stock, you're losing. Yep, you're losing. First, if you were bullish and sold the options I mentioned that were expiring the same week, which was the 15th July, expires today. If you recall, there were lower strikes below the underlining, which was $8. So since the stock's still above $8, if you go back and look at the video, what these prices were below the $8, those premiums are melted down to zero and 1 penny on the ask. Well, the good thing is, come 4 p.m., if the stock closes above $8, all that money that you collected, if you've done these trades I mentioned, which were selling the puts at the bid, you kept all that money, 100% of whatever you collected. But if the stock goes at or below your strike, so if you did the 8 strike or 750 strike and then close, if this stock price here on the top left, the underlining, is at, say, $8, well, then you're also going to receive 100 shares of the stock at that strike price, which is 8. But you still keep all that money you collected when you sold that put option. So check back at 4 p.m. or 1 minute after 4 p.m. See what this is. And also look at that prior video I made about options. You can see what the premiums were. As well as I mentioned on the ask, if you were bearish, you were selling strikes above that price. So since the stock was $8.47, you'd be looking at the strikes that were higher, $8.50, $9, $9.50. And when you look over here on the left under the calls, you're going to see the bids are down to zero and the asks are down to a penny. So again, if you were bearish and you sold the call options, let's just say you were selling the call options strike 9 or higher. Look at that. You almost at max profit. That's a great thing. So either side, you could have made money. How so? Well, if the stock stayed in that tight trading range, it would stay below 9, above 8. Let's look at the option chain. Let's look at the chart. Here we go. Let's look at the 30-minute chart. So each of these are 30 minutes. And we're looking at since Monday. Well, here's Monday. But I mentioned from Tuesday. So Tuesday, the stock's below 850 still. And it's above 8. So if you did either trade, bearish with short strikes below 850 or bullish with strikes above $8, look at that. You're collecting money instead of the whipsaw of the stock. Because when you buy stock, or short stock, there's only one thing. You have to be directionally right. Well, like I said here, if you bought the stock back on that Tuesday, you're wrong because it's lower. Let's look at another one I mentioned, which was GameStop, symbol GME. Again, here's Tuesday. Let's zoom in. So Tuesday, the stock was at 139. Here's go 139, and this area is 139. The stock went higher. And the stock's back now, 138.72. You see up here at the top left? Yep, it's below. So if you're bearish, if you're short of the stock there, well, you would have lost because it went up, unless you're still in it, and vice versa. If you're bullish and bought the stock at that price, 139, well, it's lower. But look here again. So the high for the week so far is 151.95. So round that up to 152, 152, the high 152, and the low since Tuesday, right there, 134. We look at the strikes. Here we are at the option chain. Again, the ones we were talking was the July 15th. So if you're bearish, you're looking for strikes below the 152. So look at here, 155. If you did 155 strikes, sold the strikes, you're good. You're almost at max profit. And vice versa on the bottom. What was the thing I said? The 134. 134, going under the strike column, 134. And look at the strikes, 134. Almost at max profit. Again, we're not at the market close. But the point was, I mentioned you don't have to stay in these to expiration. You can close these anytime during market hours. So let's look at one more. Let's look at a current stock. UDN. UDN. This trades inverse to the US dollar. So here, let me show you the US dollar in the futures. So you have some perspective why I'm discussing this. Here we go. Daily chart, US dollar, all-time high, all-time high. Look at this. Top of a trend, long tails on the top. Yep, there's a supply zone there, sellers. So one would expect the stock's going to go lower. Let's try to trade in the futures market. We could trade the stock ETF. And the stock ETF, instead of, because of your bearish, you can trade the stock ETF, which is a bearish ETF. Excuse me. Apologize. And instead of doing one that's expiring today, we can look further out. And you don't have to stay again till the whole expiration. But if you look at these August 19th, 35 trading days. So the stock trades inverse, okay, inverse. And look at the daily, look at that. We're at a, excuse me. I apologize. We're at a record low right now. So if you're bullish, the inverse, again, you're bearish the dollar, but you're trading the inverse, you might say, okay, let me look at the options. I can either buy the stock right now, 1782, 1782. Let's look at the 30-minute. So opened there, gapped up this morning, went higher, did retrace it, bullish. So either go ahead and buy one stock share if you think that your style is going to go lower, and this will go higher. And Monday morning, it could gap up. Or you could trade the Euro FXE. But let's look at the options. You don't have to be direction right. Because the stock is 1782, you can sell an option. So look here, the strike 17, they're not paying nothing. Nope, they're not paying nothing. Zero. But we go further out, further out. Let's look at the 16th September, 63 trading days. And again, the underlying 1782. Look at a strike below that. Well, not paying much. Let's go further out even to December, 16th December. And there we go. Paying 25. That's not much. Nope, it's not. But it's something. It's something. Or you could trade the outright stock ETF for the dollar, but this one's directional. So this one, UUP, is another stock ETF of the US dollar, but this trades bullish. Yep, this trades bullish. So if you buy the stock, you need the stock to go higher, but I'm bearish. Excuse me. Apologize. So here, you could go outright and do the option by buying two things. Either buying the puts. Let's look at this on the 7-day one, 22 July, 7 days, 7 trading days. So if I'm bearish, I go outright and buy the puts. And what happens, what needs to happen? If this goes lower, my put will go up in value. So 28.86, let's look at the nearest strike. Let's round off 29. So 29. Yep, if I'm bearish, I go outright, buy the 29 puts. And when you buy it out of the ask, 33 cents. So you can spend 33 cents, which is aka $33. So I'm sure. So bearish, you think it's going to go lower? Go ahead and buy that put, strike 29, and you're paying 33. Or I could sell the put. I could sell the call. Well, let me look here. Let's look at the 30. Nope, it's not paying much. Not paying much at all. Nope, that stinks. That's the way it rolls. But the point is, there's many strategies you could do, and these are some of the basic ones. So let's come back next week and see how these are playing out. But you still have time. You still have an hour and 5 minutes before the market closes. Decide if you want to spend $33 and buy that put. Again, if this goes lower today or Monday, these will go up in value and these will decrease in value. Vice versa. If this goes higher, if the dollar goes higher, this goes higher, well, then these will go against you because this is debit buying it. Okay, you're buying at the ask. If you want to use less capital, well, you go down a strike. Okay, 28.50. So you buy the 28.50 strike on the put, and that's 11 cents, aka $11. So the max you could lose is what you're paying for, $11. Again, we'll come back and see how these roll out. And again, we have 7 trading days. Many thanks for watching.